This is your closing grain and livestock comments here for September 17th, 2021. Corn market today down 2 1/4 off the December. Bean markets down 12 cents off the November. December Chicago wheat down 4 1/4. Minneapolis down 6, and Kansas City down 7 1/2. So it was a weaker day as you look to the developments of the grain markets today. On the week, December corn was up 9 3/4. The soybean complex was down 2 1/2 off the November, and Minneapolis wheat on the week was up 12 cents. The true weeklies will be a little bit different than that, but we just want to take a look at what the lead contracts really did in and of themselves. There was a contract expiration that always skews those a little bit. Feeder cattle on Friday down 72 1/2 cents, live cattle down 105, and the hog market up 25 cents off the October. When you look to the weeklies there, feeder cattle up 62 1/2, live cattle down 62 1/2, and the hog market was up 327 1/2. So let's look to those kind of grains and the headlines here as we start. If you look to another private sale this morning, China came in here about 132,000 metric tons. So encouraging to see those continue to show up. The one not so good rumor, and the reason beans struggle a bit today, is reports are that China had gone to Brazil for possibly 4 to 6 cargoes of soybeans, just as they're concerned a little bit about the shipping delays out of the Louisiana port. So we'd rather see them go into the P&W than to the Brazil origin, and that's what kind of caused some negativity around the market. We also saw some private forecasts out of the group formerly known as Informa. They're forecasting 2022 planted acreage of corn at 94.2, soybeans at 86.6, and all wheat at 48.5. So bigger corn and wheat numbers than really what we're anticipating. We'll cover that here a little later on, but those were the private forecasts, at least coming in the afternoon following the closing session. As we look to the chart of the day, the dollar index, one of the features we're looking at here and not getting a lot of press right now because it's not overly attractive to the underlying tone of grain exports. We're seeing the dollar index right now testing really the highs for the year. And if we break out into this range, we begin to look at that 94 and then again possibly up to that 97 area as key areas of inflection. So need to be attentive there as that very much impacts the export arena. And we're already in an environment where the Louisiana port is struggling to get back up to pace. And if you throw a strong dollar in on top of that, that just leads to some concern points. So very important that the dollar slows its gain here, or else maybe a little more of a negative approach to the grain markets. Today, we're just going to take a look at the corn S&Ds here a little bit. I really want you to focus in on the first area here, being the corn market. If we look at some of the 174 to 178 yields, I'd say the market's really getting comfortable in this 1.2 to 1.5 range. And the biggest thing we're going to want to pay attention to as we work ahead is what is the demand numbers. I think focusing in on this realm here for what we currently have and what's to come is so important. So this is what USDA is currently forecasting across the board, a 140 carryout. Here's kind of the same undertone if we have a 174 versus 178 yield. And this is a range I think the market's getting comfortable in. Now, some of the big nuggets are feed use. I think USDA is getting a little more on track with that 5.7 usage number. Ethanol at 5.2. Last year we only had 5.035. So we've really kind of seen ethanol fall off. Can we get all the way back up? There's going to be a question mark. And then obviously the big one here is this export pace. And what isn't talked about enough, in my opinion, is the fact that 2475 is a big export number. So we need big demand each week. And one of the things we did not get in yesterday's export numbers was a big export week for corn. So I think that kind of slowed the gains and got us into this price structure that we've been talking about the last few days of 535 to 550 being some resistance for corn. If we look to next year, we're leaning more on the 91.5 million acre arena. We think corn acres come down unless we see some rally potential just due to the input cost structure of corn. If we take that across trend line yield and use demand numbers similar to this last year, we grow carry out year over year with a starting of 1.408. So, very important to kind of look at that outlook. If we'd plug in a 94 plus, which is what we saw from some private estimates today, all of a sudden every million acres you increase adds 179 million to carry out. So if we're talking another 2-3 million acres higher than what we're anticipating for next year, now you start talking approaching nearly that $2 billion billion bushel carryout, and we've seen 2 billion bushel before, and those price structures are more like 340 to 450 to make that $5 level we're at right now seem like a gift. So just be attentive, be aware. We call them the way too early 2022 forecast, but something to be attentive to. And the same thing can be said for beans. As you look to the bean complex, we're at a 185 million bushel carryout level right now, according to USDA. Please keep in mind that is still a very tight level. We're only going from a 175 to 185 year over year. The market seems to be risk off, particularly because as you look to these demand numbers, we're just seeing that potential fall off of not meeting that expectation. It is far too early. Our pace is right on track, actually exceeding it by a little bit. But with the Louisiana port, heaven forbid we see another hurricane come in, the market's just being very attentive to what could China's demand needs really be. So with that all said, the yield forecast, I don't see changing the wide skew we've got there. So just kind of assume that this 50.6 is kind of home for now. But the biggest thing for next year is if we get all the way up to 90 million acres of 51 yield, we can build a little bigger carryout. But I think the privates out of today were just mid-range of 86 million acres. So we expect beans to gain on corn into planting next year if we keep the current price structure. So with that, we'll conclude today. Have yourself a great weekend. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. If you have any questions, give us a call. And please, if you got any comments about our new format, give us a call. We'd love to hear pros or cons that you're seeing. We always want to make this a good listening experience and a good viewing experience for people that are following us on the Linder Farm Network site. Have a great afternoon and